Washington DC area. We'd like to use the screen.
Good evening. Good evening. It is 7:15 by my 7:16. So I can get started. Got a little business to take care of. My name is Lloyd Allender. I'm the current president of the St. Louis Real Estate Investors Association. We're one of the, so we are probably the only not-for-profit real estate investors association in the St. Louis area. And if, not to say there's aren't other ones around. If you've been around for a while, you probably visit some of the other ones, and we encourage that. But I think you'll find we offer great value. We're here only for our members, and we're run by members. We have no for-profit motives. We're strictly nonprofit, and I think we're a 501(d), I think it is, nonprofit organization incorporated. Anyway, as part of that, we do have annual elections to elect from our membership, elect officers and directors that keep our organization going. There's none of them are paid positions. Everybody's volunteer because we've all gotten so much out of the organization that we feel it's some of it's time for us to give back. And so this month in October we have nominations for office, and then we'll have the official election at our next month's meeting in November. So I've asked Daniel Hollander, one of our longtime members, is handling the nominations for this year. Fine, Daniel, thank you.
Thank you, Lloyd. Good evening, I'm Daniel Hollander, Chair of the Nominating Committee. The Nominating Committee has the responsibility of receiving nominations, confirming the willingness of those nominees to serve, and validating the qualifications of those nominees according to the bylaws of our organization. The Board of Directors and the qualifications of those individuals that shall be elected by the members of the St. Louis Real Estate Investors Association are as follows. The office of the president must be a current board member, a general member for 3 years, and an active real estate investor. The offices of vice president, treasurer, secretary, and membership chairman must be a general member for 2 years and an active real estate investor. 3 general directors must be general members for 2 years and an active real estate investor. An active real estate investor is one who owns real estate, excluding the principal residence, for the purpose of rental or resale. Those individuals that have been nominated and have expressed a willingness to serve on the board for the year 2022 are as follows. For the office of president, Lloyd Allender. For the office of vice president, Dan Heyman. For the office of secretary, Janet Keller. For the office of treasurer, Jim Choate. For the membership chairman, Laura Lee. The 3 nominees for general directors are John Lee, Laura Jimerson, and Diana Mayo. At this time, the nominating committee would like to call for nominations from the floor. Hearing no additional nominations, I will entertain a motion to close the nominations.
Can you guys hear those on the phone?
I have a motion. Do I have a second? I have a second. I move the nominations are closed. It has been moved and seconded that the nominations are closed. All those in favor say aye. All opposed say no. The ayes have it. The motion is carried. Thank you.
Okay, thank you, Daniel. Appreciate it. Thank you. And one other thing, I meant to ask any first-time visitors that are here. We got a person. Please stand up. Stand up to the way to recognize you. Give a round of applause. And great choice, a group to visit, starting out your journey as an investor. And also, I wanted to, we're going to be taking questions from the audience later. And could I get somebody, Great job already. Okay, wait till we get questions. That's it. Thanks, Dan. Okay, so, and when we take questions, you can, if you'll hold off you hold your question until Daniel gets to you with the mic, because we do have another audience that's watching on Zoom, and if you don't get talking to the mic, they're missing out on it. I have to apologize that for last month, I kind of neglected some of our folks that are tuning in on Zoom. Anyway, we have a little time here. I know a few people had some announcements or they wanted to make. Anybody right over here? Okay, there you go.
Yeah, this still works. Yes, my name is Mike Bayard. A lot of you people know me. A lot of you people should know me. I don't know. But anyway, I got a thing here in the mail, and it's a questionable thing here with that. And this company from New York, I call it New York with that. And anyway, they're offering a thing to buy houses from everybody. But the thing is, they give you your money, but you got to pay market rent for them to get this. And it sounds like it's a good deal with some of this, but really, you only get maybe 4 or 5 years out of this, and then your money runs out, and then you're locked into the payment. So now you have no money and probably won't have a house either with that. So anyway, if anybody gets any kind of letters like this, probably because they get us because we're seniors and all, we're looking for the scams out there with that. So anyway, just beware of anything you get out here with all that. Be careful with that. So, all right, that's it.
Hey, thank you. Anybody else have anything? Also, I do want to mention we have one of our sponsors over here, Michael from J&M Capital. If you haven't talked to him already, he's got some, I'll let him say a few words himself.
Thanks, Mike. I'll just quickly introduce myself. My name is Michael Casey. I'm with JM Capital. I am a private money lender, so I've specialized in hard money loans for rehab loans and then for 30-year rental property loans. So if you have any questions or anything like that I can help you out with, just stop on by.
Yeah, I'm looking for an accountant. So after the meeting, come see me if you have a real estate accountant that you would recommend. My guy just went out for the weekend. 150 clients, didn't sell the business, didn't take any clients with him, just stopped. Ooh, yeah, really weird. So anyway, I need help. I need an accountant. Thanks.
Okay,
Hey, David Randolph, just come see me after the meeting.
okay. Yeah, if your accountant isn't overworked already, say that's a problem of mine. I've asked him to come here to speak, but he doesn't want to meet any more business. Good.
Hello, I'm Demetrius Outlaw, and I'm looking for 4 families, 4 duplexes to purchase as rental investments.
Okay, can we do a phone number or for people that are on Zoom, maybe they want to contact you.
Phone number is 314-853-3127.
Okay, thank you. Anybody else have anything?
I'll do the same as Mr. Outlaw over there. I am also looking for quads or duplexes for rental investments, you can contact me either at lydiaurban@yahoo.com or my phone number is currently deactivated, but I just got it stolen. So that's unfortunate, but I do have another phone number. So it is 314-626-3095. So we're both on the same page here.
Okay, great. Anybody else have anything, general announcement, or just a little haves and wants? We're gonna do a full haves and wants session here, but if you got something urgent, you want a message you want to get out to the rest of the group, how's your opportunity? If not, thank you, Daniel. You go ahead and sit down for now and until we get questions coming in from Stephen's presentation. Anyway, we're going to move on to our main event at this time. Pleased to have Stephen Palman, he's one of our own members from Bayard Business Capital and Consulting. He's been very helpful early on in the pandemic with some of our Friday Zoom meetings, if you were participating in some of those. Helping our members get apply for those PPP loans and the other programs that were available through the SBA and things for people that were full-time businesses in real estate. But anyway, he's agreed to come on tonight. We're very pleased to have him again. Please welcome Stephen Palman.
Again, my name is Stevens Plowman, and my firm is Bayard Business Capital and Consulting. We're basically a boutique correspondent bank, and what that really means is we're commercial loan brokers. I started the company 7 years ago, and as of last week, we closed about 159 different transactions with 23 different lenders. The vast majority of our transactions are commercial real estate, then SBA. We got very busy with the PPPs when the COVID started. But we also do transactions that are straight working capital for businesses and equipment leasing. But again, most of our work is commercial real estate. I retired from what you traditionally think of banking 7 years ago. Started this company then. A lot of it was, I was just simply had a lot of energy. Also think my wife was tired of me hanging around the house maybe a little bit. And since then, we've had other community bankers that have joined us and come along. I'd also like to introduce Ed Schmidt over here, my associate, another probably 40-year community banker here in the St. Louis area, who knows an awful lot of the local community banks. Let's think here. The largest transaction we've done since we got started was about $11 million hotel complex. The smallest transaction we've done is $17,000 for a piece of specialized agricultural equipment. I've done 3 different transactions with members of the association. The smallest was about $35,000. Largest was $250,000. And in between there was one for about $75,000. Examples of transactions that have been done here were for individual single-family investment property on the south side of the city. $250,000 was a duplex out in St. Charles County, and the $75,000 was a duplex up in the North County. So that kind of gives you a background of a lot of the different transactions we do. We normally meet with our clients, try to understand the transaction they want to complete, also try to get our hands around their financial strength, look at the transaction and decide what's the appropriate lender for them dealing with that transaction and their current financial strength. If it's a strong financial transaction, we will probably take it to a local bank here in the St. Louis market, try to get them 3 or 4 different proposals bring it back to them for the best deal. Then we have non-bank lenders that charge a little bit more than the local bank, but they also accept credits that maybe are slightly weaker than what the local banks will take. So those transactions are probably in the 5 to 7% transactions. And then, of course, there's hard money lenders that are quite a bit more than that. But again, if you need money quick, that's a good place to start. This 2 months ago, we took on 2 new lenders that are nationwide real estate investment lenders, Apex Mortgage and CoreVest. The reason we took these on was that Apex does smaller transactions. They'll literally make a loan down to $25,000 for the purchase of property. CoreVest is a much larger lender and is really looking for larger type transactions. So we wanted lenders that could do both the different types. With Apex, they really focus on borrowers that are probably self-employed, that don't have a regular payroll check. So you're talking about self-employed, maybe have a lower credit score, maybe have some tax lien issues that have happened in the past. And again, they're going to be about 3% more than the local banks right now. So their rates are going to start at 5 1/4, go up from there depending upon the financial strength of the borrower. Their loan to values are going to run at 70%, which is quite a bit lower than if you've been doing transactions at 80%. But again, they're looking at a transaction that maybe the credit score isn't as strong otherwise. They have prepayment penalties. It's the 5% the first year, 4%, 3%, 2% that goes down for the first 5 years. Their rates are floating with Wall Street Journal Prime +3. They will do a term for 30 years, which is nice. Most of the banks will, at the longest, will go out 25 years, and really that's only for owner-occupied property. The bank examiners like them to stay at 20 years on investment property. The nice thing about Apex is they're very quick. Only about 3 documents they need. An LOI can be issued probably within 24 hours after that. Normally we work with the borrower getting the LOI out. At that point in time, we put the borrower and Apex together so they can work it out, and we're there to help coordinate the transaction from there. CoreVest is the other lender that we took on this year, and again, they are for larger type projects than Apex. CoreVest has 2 big approaches, and under that they have 5 different products. And the big approaches are, 1, they have 3 different products for you to purchase property, and then the other 2 are to term it out. CoreVest is a large California private equity firm. They have about $3 billion right now in current loans, and they've done over 20,000 different property transactions across the country. On their permanent type loans, for example, they have one that's called a rental portfolio. You have to have a minimum of 5 units. The LTV will go up to 75%. They'll lock it in for 5 years or 10 years on their interest rate, and they'll do a 30-year amortization. Their other primary product for keeping the property is a single asset rental. So this is if you're just buying one individual asset, and that starts at $67,000 and goes up to $1.4 million, depending upon the size of the asset. 75% LTV in a 30-year term. The nice things about these products that they have on these 2 is that they're non-recourse. And by that, I mean that you don't personally guarantee it. So they've got to have documentation that the property is generating enough income from itself to make the loan payments. The other big product they have, again, approach is for different specific, for acquiring the properties. Ed right now is working with a client to get that in place. And Ed, you're more familiar with that. You want to speak about that?
I did want to say, one of the few benefits of aging is that we know, as he said, a lot of the local bankers, we know how they think. And the product I'm about to describe may or may not be available, but if you want to have more details, please come over to our table after the meeting. We'd love to talk to you, but just in general, not just this one product. But imagine if you wanted to have, or you had the ability, without necessarily having a cash in hand, to go and buy, say, a $300,000 house that you want to refi, or excuse me, that you want to rehab, and you go into the bank and locally and say, I want to buy this and I want to flip it or I want to rent it. And they say, well, boy, we don't have loan committee for 2 weeks and this house is going to probably sell in that time frame. So this outfit that we have hooked up with in California offer a line of credit. Now it is a large one, it's $1 million, that's the minimum, okay? But you can obviously buy multiple properties on it. You can advance for that $300,000 one, they typically go up to 80%. Then all of a sudden you find one that's only 150, where you talk directly to them, not to us, and say, I've got another one. They have an international or a national appraisal company that comes and appraises it quickly. They're not, the appraisal company is not in California. They have them all over the country. And so you get a quick answer. The key to it is, as far as getting the approval for the line itself, is that they want people that are experienced in this type of purchasing. They have a great team to help them do the rehab. Maybe even the borrower participates themselves in that. And they need to have a decent amount of liquidity. So understand that the personal statements of everybody on that particular note would have to have at least 20% in cash if they wanted to borrow, have $1 million line. So you're looking at $200,000. Their pricing is actually pretty reasonable, depending on the strength of mainly those 3 criteria. You're looking at current rate. I asked Stevens this. It ranges from 6.25% to 7.25%, and that is for a fixed term. That does not flip. It can go up to 18 months. So yeah, you would need to renew it after 18 months if you want to still have it. But it's a very competitive and convenient way to acquire the property. They also allow up to 80% of the rehab costs to be advanced off the note. So again, you have to have 20% for that as well. There aren't many banks out there that are doing 100%. They can be on the same line. Yes. You have to have 20% liquidity. If that house is going to sell for 500, the one I used the example, you're going to have the acquisition price, 20% is, it was 300. So you're looking at 60,000 there. And the rehab is 200. So that's why the liquidity is so important. The experience and all that and the credit scores are all important. But if you don't have the liquidity to do that product, it may not be for you. Yes, they do. Oh. I could hear it talking about it. Oh, they can, right?
Yeah.
Right.
Okay, so you mentioned that it's the initial line starts at $1 million. So does that mean that you're now paying back interest on that line, whether you borrow, whether you draw it out or not?
No, only when you draw it. only
Okay.
when you draw.
Only when you
So in other
draw.
words, they sent
So you
you,
must qualify for $1 million, I guess.
yes.
Okay,
They set you up with documentation.
Yeah.
And you may not find a house for 6 months.
okay,
Well, you're not paying any interest on the money until you draw it.
I got you. But you must qualify for that $1 million.
Yes.
You're not gonna qualify for anything less than $1 million.
Yes.
I got you.
The other thing I want to stress is that since everybody in this room, me included, can't just set up a line of credit for $1 million, we know enough people in the industry, in the lending industry, that would go way under that number, but they may not have the same product for it. We can explain that in more detail, because each of you may have a case-by-case basis where you went into the bank and one of them says one thing and one says another. We can try and help guide you through that morass of bankers, since we used to be them. You know, we kind of know what they're thinking. The good news is I've talked to a number of local bankers of late. Now granted, like Stephen says, they're normally dealing with commercial properties, but we all know the housing market is still very strong. And believe it or not, the commercial property market is still very strong. So if any of you know of anyone that wants to borrow money, we can try and direct you to the right individual or bank just based on our experience. So, yes, sir. Wait a minute, just a second. I could hear this other fellow a little better.
The 20% liquidity, is that simply to guarantee the loan or?
It's not pledged as some sort of guarantee. You have to just show it on your your personal financial statement, or you and your partners.
Just showing stability.
You have to show it in cash in a bank or banks or at a securities firm or something like that in order to qualify. But that money is not going to be pledged.
It's just to qualify for
Yes.
stability, show that.
Yeah, go ahead, I'm sorry.
It's 80%, because you're putting up 20%, right?
Yes.
So,
At the
so
closing.
for instance, there's $100,000 property. They're only gonna give you 80, and you're gonna provide the other 20
That's correct.
in that respect. So yes, you do. So
That is a down payment as opposed to a
Yeah,
cash securitized loan.
okay, all right, yeah.
But as Stephen said also, I should have said cash or near cash. So if you have a securities portfolio, we can include that in your presentation. So basically what this, but you still have to obviously come up with cash, whether you're borrowing against that portfolio or you're cashing in securities, whatever, you still have to show up with 20% at the closing. Okay, because the bank's not doing 100%, or this lender's not doing 100%. So it is a nifty product. We are excited to try and get it sold around town for those people that are interested. But if it's, like I said, if it's going to be a smaller dollar amount, we can help you in other ways. But as he said, also, once you find these houses and you end up renting them and you're keeping them, they also have an avenue to put those on a more permanent financing. So if that, to use your example, if the $80,000 line drawn is now finished, rehab, rented, they can then make you a separate term loan that pays that line down to zero, and you now have a term note for the 80,000. So your commitment to them now is $1,080,000 after they close that term. Okay.
I want to stress the point that Ed made, that, I mean, we talk to local banks here weekly, and you know, a lot of the community banks, their lending priorities change over time. So, you know, you can have a community bank that's very interested in financing duplexes, and at some point in time, they get up to about 25% of their total loan portfolios in duplexes. Well, then they will cut it off. They've got a concentration problem or potential problem. at that point in time. So that's one of the reasons we talk to so many banks, is that we want to know who's active in the market and who's pulling back from the market. Other questions, comments? Anything on the Zoom? Okay.
Questions you can answer, I just gave you your phone number.
Okay. Well, we'd love to help you out if you've got anything. Thank you very much. Got my water.
Thank you, Stevens, really appreciate it. Anybody got any, a personal situation you want to talk to them about, please feel free to do that. We're gonna be around till, what time is it now? We have plenty of extra time. Take another look at some of the materials over there. Like I said, we got thousands of dollars worth of materials, educational materials that can be purchased for pennies on the dollar, put it that way. Anyway, we've got more refreshments, so hang around, do some more networking. Come talk with Stevens and his partner over here, or Michael from JM Capital. Thank you all for coming.